using the MAEE concept or strategy. If you watched the previous video before this, I taught you a new strategy. Not really new, it's new because I'm just introducing it. All right, but then I've been using this particular strategy for some years now, and at least I have an edge of 65% in the market. That means anytime you execute a trade using this particular strategy, chances are that 65% of the time you are going to be right. And if the edge over the market is 65%, then I think this strategy is good and every single person needs to know. So if you are watching this video, please subscribe to the channel, leave your comment in the comment section, share this video to your colleague traders or anyone who has been struggling for some time now, because forex strategy requires you to have a winning strategy. All right, a winning strategy. The forex trading strategy should have an edge over the market. So this I've tried different currency pairs, yes, but then I resorted to some few. All right, and also I've tried different strategies. I've tried the SMC, which is a smart money concept, ICT, inner circle trading. I've tried Trinity flow concept, a lot, but then I resolved to this particular strategy. So let me just get into the video. Right, in the main concept of strategy, the first thing we are looking out for is what we call the market structure. All right, the market structure, where it tells us the direction, all right, direction or trend of the market. All right, in the market structure, we are looking for the current direction. Sorry guys, TradingView is trying to do the advert, but yeah, we find out the market structure, which is the direction or trend of the market. All right, and then in that one I told you that we are looking for three things. It's the market in an uptrend. If the market is in an uptrend, we look for buying opportunities. All right, then downtrend, we look for what? Selling opportunities. Then when the market is in a range or consolidation, or other people call accumulation, we look for opportunities in other markets, or we stay out of the market. So yeah, that's the first thing we're going to look out for. Then the second thing we look out for in this particular strategy is what we call the area of value. All right, area of value, where we use the support and resistance to find our entry zones. All right, so yeah, and then the next one we look out for is what we call entry trigger. Entry trigger. So that one, the simple explanation is what will cause you to press the buy or sell button, or what will cause you to enter the trade at that particular zone. All right, so we resort to what we call candlesticks. All right, and I listed some few candlesticks. I said when the market is in an uptrend, I'm looking for buying opportunities at the support zone. I'll look for a hammer candlestick, I'll look for a bullish engulfing candle, or a morning star. And when the market is in a downtrend and I'm looking for selling opportunities as the resistance zone, I'll look for a shooting star, a bearish engulfing candle, or an evening star candle. All right, so these are the 6 candles I use to confirm my entry at the area of values. Then the last thing we look out for is exit, where we set our take profit and what? Our stop loss, which is very, very important if you want to be a good risk manager. All right, because strategy without risk management will take you back to square one. So without much, let me just get into the video and analyze this currency pair. So as we can see, this is GBP JPY, and let's see the trend of the market. Right from here, we saw the market go all the way up, came down, went up, all right, came down, went up, came down, went up, came back to retest this point, went all the way up, all right. Was trying to reverse, but it couldn't break this particular lows here. So they retested, went up again, retesting again. All right, so from here, we can see that the market went up, down, went up. So we are seeing that the market is in an uptrend, right? You see a series of higher highs and higher lows. So we've resulted that, of course, the current trend of this market is an uptrend. All right, so the next thing we are looking out for is to draw the support, which is the area of value, the support and resistance zones. All right, so in the support, what I do is to zoom out of the market for some about 5 times. All right, then I come back here and I see that the market has retested this point as resistance. When it came down, came here. All right, then when it came here, retested this particular resistance. Now it acted as support and pushed up. The price came, retested again, and pushed up. So that can be a good area of value. All right, so what I do is to draw my support level at this point. All right, touching this point. If you extend it, it can touch this point too. Are you seeing that? Then you have to know that support is an area, not a line. So I've drawn my good area of value, which is a support zone at this point. So what I do is to now bring the rectangle and draw my nice area of value here. All right, then I'll draw one more. Where is the point? It retested again when the price came down. This point and this point can be another support zone. So what I do is to draw a mini one at this point. So what I'm saying is that now the market is in an uptrend. When the price retests here and goes up, the uptrend has not been broken, all right? But when the price comes down, retests this point and still goes up, it's still in an uptrend, all right? But then when the price comes down and breaks this to this point, I know that the trend of the market has changed from uptrend to a downtrend. Are you seeing that? Simple as that. Yeah, so this is basically my support zones. Yeah, so I'll now zoom down to the 15 minutes time frame. You know, this is top-down analysis, and my higher time frame for analysis is the 4-hour time frame. So I zoom down to the 15 minutes time frame to find a perfect entry. And on the 15 minutes time frame, you will see mini supports within. Are you seeing that? So for instance, at this point, this point, right? If you trace it all the way to this point, you can see that there is a mini support at that particular point over there. All right, so I'll draw a new support zone at this point, at this particular point here. Then I will draw another one at this particular point. All right, yeah, so that's it. Then I will look for a confirmation, and it appears the market is trying to give me a confirmation at this point, at this particular point. You see this candlestick is a hammer candlestick, another hammer, the blue candle formed. All right, so I'm expecting that I have to enter at this point, but you know the market has started retracing. I know definitely going to retrace to this point because this is the lowest price the market has reached in the last few days. All right, so I know to retest this point and begin to go up. So right from when we retest and it's going up, I'll enter the market from here. You see how simple the strategy is. I've analyzed that already. You see, so I will look for entry at this point. That's when the price comes back here, set my take profit here, my stop loss can be somewhere here. And so even if you want to enter now, all right, you know definitely the price might retest this point, will not touch the stop loss. All right, try to do this and go all the way up, then we can end up in profit. All right, so this is how this strategy works. So this is for GBP JPY. Let's see Euro JPY. Let's see the analysis right from here. Okay, yeah, so as you can see, this pair is also in an uptrend. All right, this pair is also in an uptrend because what are we seeing? The price goes up, comes down, breaks the structure, comes down, tries to form whatever here. All right, comes down. Sorry for whatever, guys. Yeah, and then we have this particular thing over here. So we can see that definitely the price is in an uptrend. So what we find is our support zone. All right, looking back, we can see this point as a good support zone. So what I will do, which is the area of value, right? So I will draw my support zone at this particular point here. All right, then I will look for another support zone at this point. All right, and I've told you why I draw two support zones. When the price breaks the second one, I know the market has changed structure to a downtrend. All right, once I find these, I'll zoom down to the 15 minutes time frame. 15 minutes time frame to look for entry. All right, so even here on the 15 minutes time frame, this seems to be a good support zone. See this point retesting here too. So at this point, I can look for an entry by looking for a good candlestick to enter the trade. All right, so here you can draw a mini support zone at this point. All right, and then as at this time, the price has not really formed our confirmation candle. Even here is a hammer, right? Here, this point is a hammer, but it didn't form at the support zone. So I'll wait for another ones to be formed at the support zone, all right, before I will enter long. Because the market is in an uptrend, I will only be looking for a buying opportunity. So the price will come down, try to form either a hammer, bullish candlestick, or a morning star here. Then I'll look to enter the market at this point, set my stop loss right below the support zone. All right, so now on the Euro JPY, I cannot enter because I don't have a confirmation for entry, but on the GBP JPY, you can actually enter. So this is how this strategy works, and that's why we call the MAEE concept. You first look out for the market structure, then you look out for the area of value, all right, then you look out for entry triggers, then you look out for exit, which is the take profit and the stop loss. All right, I believe you learned something new. Practice this, backtest this many times. All right, watch the previous video before this and try to backtest this particular strategy. All right, thank you very much, guys. See you in the next video. Bye.